big deal.
This is what it was the first that I'd heard of it. And Sean has been working and discovering about this for a month or so. Is that right?
Yeah, I've had a couple clients talk to me, and it's coming to be more and more over the last 6 months. I'm seeing more situations like this, and I think that this is going to be a key part of our industry going forward. I think that in the next 2 to 3 years, a lot of our clients are going to be dealing with this, and I kind of want to get ahead of the game and share the information and get the experience to help people reestablish their credit after a short sale or a foreclosure in order to qualify for a new purchase.
So tell us about what's been going on in the foreclosure industry.
Okay, so one of the things that's going on right now, and I've been approached by a couple of clients that have wanted to qualify for a new loan.
Right.
Basically what's happening is they were foreclosed on in 2007, and today is 2010.
3 years seasoning.
3 years later.
Okay.
Typically, if you go through a bankruptcy, it's a 2-year seasoning period. Short sales about 3 years, and a foreclosure is about 4 years right now. Different circumstances can change that seasoning period, but here's what's going on. So you lose your house in 2007, and you think, okay, well, 3-year seasoning period, I want to buy a new house.
Right.
Okay, I lost the house. I moved out of it. The bank took the possession of the property back. Okay.
Right, and I've moved on.
I've moved on. We're thinking that we have our documents in place, that the bank's recording their title deeds, so that they're taking possession of the property. Are they going to take ownership of the property? And that's what it really comes down to. And what we're finding is that the recording of the deed is not being recorded immediately, and the banks aren't reporting on your credit report the actual dates of the foreclosure transfer.
What is the benefit of that to the bank? Why do they do that?
That's a very simple one. They can take possession back because now they have the asset. But if they do not record the trust deed and formally take the property back, they're not responsible for the property taxes or the HOA dues, or probably even the lease if it's on leased land. There are certain reoccurring fees that are associated with owning real estate. And when you're not the formal owner of record, on title, they're not responsible for it.
Oh, okay, so this could get very, very ugly and very, very convoluted. So, and it is a bit of a complex, situation. You really need to think this through, because what you're telling me is, I foreclosed on my home. My home was foreclosed on, and now I'm working on reestablishing my credit. And it's usually from the day the property has been foreclosed on, correct?
Right.
Okay.
Yeah.
So 2006, I got foreclosed on, and what you're telling me is the bank has not recorded a new deed of trust saying that the bank
You can still be the owner of record and not have possession of the property.
Exactly.
On title.
On title.
Right. Yeah.
On title again. So what that means is until the bank actually records themselves as the new owner, my credit on the foreclosure still remains.
Listen to this one. The
really
mortgage reporting on your credit report could continue to show you as delinquent and not as a closed line.
That's what I was trying to
get.
Yeah,
that's what you're getting at.
Yeah, I'm glad.
So
my credit report now going to show that I still have that loan, but I'm just in a
you moved out in
state.
January, but it's November, December now, and it's still reporting as you being late.
So
but you thought you foreclosed, so in your mind it should be a closed line of credit. You've moved on. You're thinking that the bank's doing their paperwork to make sure everything's all their ducks are in a row.
But the healing doesn't start.
Exactly.
For another 6 months, 9 months, 12 months until they record it.
Yep.
And you're still responsible for your homeowners association, the taxes. That would still be on you,
well,
correct?
The loophole in all this is that the foreclosure process actually wipes that out. So if the bank hasn't foreclosed yet, they can foreclose out those back taxes and the HOA dues. Okay? So they're only going to be responsible for paying those from when they start with the ownership. So if they haven't taken
recorded ownership.
So if they haven't taken it over yet, the bank's not responsible for it. So that's why we're seeing, well, they're prepping all these properties, they record, and then boom, they're on the market immediately.
This is huge,
Yeah.
Sean. This is huge. And you've been discovering this just because you've got a few clients coming to you that, foreclosed 3-4 years ago. And
what we're finding on their credit reports when I'm pre-approving them is that the bank's not actually reporting on their credit when the foreclosure actually took place. What it says on your credit report actually is that the foreclosure has been initiated, but unless it says that the foreclosure has been closed out, then you're still like in the process. So what I had in this experience, she lost the house in October of 2007, and it wasn't until October of 2009 when her credit report for that property actually said that the property had foreclosed.
that it had closed.
Okay,
Right.
so her seasoning period is not 3-4 years.
It's only been 1 year instead of 3 years.
Right. So now you've just got an elongated her seasoning period. Okay, so this is for foreclosure.
So my tip for this is with a foreclosure is to make sure if you have a realtor that's coming to you for the cash for keys, get all the documentation you can, sign it, whatever you need to do to make sure that you have something documenting that you're giving up the ownership of the property and that the bank is going to take over the house.
And how about when you get those notice of defaults? You should save those
Yes.
as well, because those are documented with dates.
Save all those records. What happened in her situation was that an NOD was not actually filed, which is another representation of the bank not doing their due diligence, their process. So there's never an NOD recorded on that property, which makes it even more difficult for somebody like me to do the credit repair and make sure that we can get them re-credit qualified.
That also holds them kind of out there in liable too, the bank, I mean, because they have to do that due diligence, which is to give a notice of default.
Right. So my recommendation is just to hang on to all of your paperwork, over-document it, maybe even keep a log of the transactions and the conversations that you're having with people so you can reference it in the future.
I have another idea.
Yeah.
Which I think also might eliminate this problem.
What's that?
Instead of letting it go to foreclosure, wouldn't it be a better idea to short sale your home?
Short selling right now, I think if you can, it's the best opportunity to go ahead and go through that process if possible. And here are a couple of reasons why. When you short sell your property, you have a formal recording date.
Okay.
Okay. You have a formal settlement date with your escrow company, and the property is actually being transferred.
Right.
Okay. It's almost immediate recognition that you're no longer liable for the property, and the day after you close, you can actually start your seasoning period. You have a settlement statement, and you have the title that's already going to be taken care of.
Right.
Okay. Short sales also are technically a better sign of good faith to the banks. Now, we're not really hearing that, but let me tell you why this is. Basically, if you're foreclosing, you're not working with the banks, you're not being proactive, you're not really interested or worried about your credit.
And it costs more for the bank to actually do that.
It costs a lot more
transaction.
for the bank for all the costs and everything associated with doing the foreclosure. Short sales are actually less expensive. So yes, it's going to take a little bit of work, but it's better for your credit, and it's a shorter time period for you guys to get re-seasoned for that.
Great. So you're listening to Desert Real Estate Today on 94.3, the news.